Welcome back. AI money is moving. That's the focus of today's video. Because in reality, guys, the retail crowd and the news headlines continue to chase high bandwidth memory. Any update from Micron, SK Hynix, or Samsung immediately catches the attention of the news wires. But in reality, something fundamentally has been shifting in the memory trade. I have felt the difference over the last few weeks. You probably have felt it as well because there is a massive divergence in the trade right now. And the growth of the cold storage story is rising and growing each and every day. And reality is our storage providers, Western Digital and Seagate, they are leading the way in the trade right now. They are driving the growth of the memory sector over the last few weeks. But for the past 18 months, we know the hot trade has been DRAM and NAND because these two memory products are fast, they're flashy. They are the memory that fuels the real-time AI training. But for the past few weeks, we felt and seen something completely different. And the tape is telling us a completely different story. The reality has been staring at us in the face. The storage players are having a massive divergence within the group. But we continue to see Micron and SanDisk. They're the ones that are being hit with the massive valuations. They're the ones that are catching the attention of the analysts and getting price target adjustments. But the real institutional accumulation that we're seeing right now, it's not happening with those players. The real institutional accumulation is happening in the old tech world. It's happening with the storage players. It's with the hard disk drives overall and the value that they provide to AI demand and they provide to the hyperscalers. Today, I'm going to make a case for why Western Digital and Seagate may actually be stronger investment options in today's market and why the cold storage layer is the most undervalued piece of the AI infrastructure stack. If you want to find a true alpha right now in 2026 in this memory trade, you may have to look in an area that many people just find boring. But here's the funny thing. The hyperscalers don't find these companies boring. They find them critical to their business overall. That's why we're going to dive in and that's why we're going to talk about it in today's video. If you haven't done it already, hit like, hit subscribe to the channel. But let's first, before we dive in and talk about what differentiates these companies, let's look at their performance today. Let's see what's happening in the after hours, and let's look at what's happened over the last 30 to 90 days for the trend for these companies overall. So let's first jump over and take a look at Western Digital. You can see Western Digital had a strong day, almost a $10 gain, a little over 2.5% growth. Again, set a new record. Both Western Digital and Seagate did it again today. Broken record trend, as I keep saying. Every time they trade, they set a new 52-week high right now. This is the type of divergence we're seeing in the market, and it's what caught my attention, and it's why I wanted to make this video. You look in the after hours, they're continuing to grow. Another 1%, almost another $4 gain, closed at $380 today. If we look at Seagate, Seagate had a massive day today. Seagate closed at over 560 today. You can see it in a second when it pulls up. And let me hit it again. There you go. Closed at 560 today. $20 gain. Almost a 4% growth on the day. In the after hours, again, almost another $6 on top. Pushing right now close to 566. Another 1% gain. Another record overall for them. They're trading near their 52-week high. Sorry, they got above that. Apparently, their 52-week high is 567. So they didn't set the record today, as I mentioned in the beginning, but they have been on fire recently. And we want to compare that to our traditional players. If we look at Micron, in my opinion, Micron had a strong day today. It was up about $1, had a little up and down as usual, fighting that 450 range again, closed at 450. But look what's happening in the after hours right now for them. A $4 gain, a 1% gain, up over 450. Can we hold it tomorrow? I sure hope so. I want to see this stock push through 460, start to push above 470, hit 470 and break through that ceiling and keep growing. But right now it had a good day. It was kind of an up and down throughout the day. And then we look at SanDisk. SanDisk was down today by about $10. I think it was over about $9.50, 1%, but it seems to be picking it all right back up and a little more in the after hours. So right now SanDisk is trading at $9.13 in the after hours with about a $9.50 gain. But here's what I want to draw your attention to, because it's kind of what set the stage for me for his video and why I've been thinking this way. If you just look at the trends down here, I want to draw your attention to the 1 month and the 3 month. So Western Digital in a 1 month has been up 28%. In a 3 months, it's been up 55%. And how does that compare to Seagate? Let me tell you, Seagate's going to be a little higher. Seagate is up 31% in the last 30 days. The last 90 days, 57%. Now, guys, here's the reality. How does that compare to the traditional players? Both of these guys are outpacing Micron in that 30 and 90-day pace. They're on track with SanDisk in the 30-day phase. And we know how parabolic SanDisk has been. They're not as grown. They didn't grow as fast as SanDisk in the 90 days, just to be full transparent. But I don't know many companies in the market that have the same growth rate that SanDisk has in the 90 or even longer of the last year. They are super parabolic, over 2,000% growth rate, I think, in the last year. So that's a tough comparison. But in the last 30 and 90 days, the hard disk drives have not only been holding their own, they frankly have been outdriving performance from so many companies in the market, and they've been leading the way overall in the sector. So let's talk about why. There's some things I want to call out specifically about why we're seeing this divergence with the hard disk players. The biggest shift, I think it all comes down to one word, which is exabytes. You know, we know in the training phase of AI, we needed speed. We needed SSDs to feed the GPUs, but we have now entered the data sovereignty phase. Every enterprise on earth is now building data lakes, massive repositories that hold every email, document, customer interaction. They need all of this to train their proprietary models. So despite, you know, all of the bears saying that for the 20 years, there's been predictions about the death of the disk for the last 20 years. We're continuing to see strong performance for it. It's actually stronger than ever right now. And part of that story is the price gap that we see with these. It remains to be very stubborn. In 2026, enterprise SSDs still cost 5 to 7 times more terabyte than a high density HDD. Let me show you an article that calls that out overall. And you can just see, let me pull that up, but you can see on your screen here, let me pull down. This is from CIO, and it says the end of predictable storage economics and what it means for infrastructure planning. The piece that I want to call out is right here. You can see the enterprise storage market is currently experiencing unprecedented SSD price volatility. It's been, you know, it's driven by massive AI demand and multi-year capacity commitments from the hyperscalers. Guys, here's the piece that I haven't heard a lot of people talk about, but between Q2 2025 and Q1 2026, a 30 terabit SSD price has increased by almost 260%, going from $3,000 to almost $11,000. At that same time frame, or in that same time frame, HDD pricing remained relatively stable, increasing by 35%. Now, 35% may not seem stable, but if you look at it in comparison to what we're seeing with SSDs, it's a heck of a lot more favorable for the hyperscalers overall. And that's just part of it. I think you're seeing that staggering divergence with price. And while, you know, the NAND shortages are driving that up to almost 260%, this is a mathematical wall in reality that hyperscalers just cannot ignore in the marketplace today. So that's part of the reason why we're seeing this resurgence or this demand and being driven to HDDs. The other piece is the power squeeze. We know, you know, this is an insight in the market that I feel has been missing with regards to kind of the SSDs and the HDDs, is that data centers are now hitting the power wall. I think all of us are familiar with that on this channel. But high density HDDs, like what Western and Seagate bring to the market, particularly Western's, their 40 Ultra SMR drive, they allow hyperscalers to store double the amount of data in the same physical rack space with only a marginal increase in power. So this is a huge play for them too. They're able to keep the power down while maintaining massive amount of storage and doubling the amount of storage for the same physical space. And then you have the revenue visibility overall for investors. This is critical for us for the storage players, because Western Digital reported that their manufacturing capacity is fully booked out through 2026. And they are now signing multi-year agreements. Think about that. In a world of boom bust cycles, the HDD makers now have utility style revenue visibility. And let me show you an article that highlights that Simply Wall Street put out. And you can see here on the screen, you've got Western Digital refocuses on AI storage with locked in capacity through 2026. So they confirmed, they're right here in the green. They've confirmed that their manufacturing capacity is effectively booked through 2026 under multi-year agreements with cloud hyperscalers. So just think about that. You have a boring company, right? A boring HDD company now that is confirmed that they are booked, effectively booked solid through the end of the year. Now let's shift gears a little bit and talk about the tech behind the HDD players or the storage players overall. Because in my opinion, this is part of the reason why the investment approach or the investment strategy of re-looking at them becomes even stronger, becomes more defensible to us in the market. The bears have argued for years that HDDs would hit a density ceiling, but the reality, they're just dead wrong. What we're seeing right now from Seagate with their HAMR or their heat-assisted magnetic recording is it's no longer a lab project. It is a production reality. By using tiny laser diodes to heat the platter, Seagate is on a roadmap to 100 terabit drives by 2029. Let me show you an article that just called out this that I read earlier today. I found it pretty fascinating. Let me pull it up for you guys. But you can see it focuses on both of them. It's the race to the 100 terabit, how Seagate and Western Digital are engineering the HAMR era. There's a few things I wanted to call out. First, right here is the AI scale growth. HAMR is projected to restore a 20% CAGR in storage density, essential for the massive data demands of generative AI and global hyperscale infrastructure. But there's a piece down here that I want to call out. It's the road to the 100 terabit and beyond. And let me just read this to you. The integration of HAMR is not just an incremental update. It is the most significant architectural shift in HDD history. As the world enters the AI-driven data economy, Advanced Storage Research Council predicts that HAMR will allow the industry to return to a 20% annual growth rate in density. Whether that's through Seagate's early mover and their Mosaic, or it's through Western Digital's parallel innovation strategy, the outcome for the data center is the same. The 100 terabit hard drive is no matter longer of if. It is now a matter of when. That is a very strong report to put in the market. And that's kind of the reality that we're seeing overall. You know, they are confirmed that the HAMR technology is restoring a 20% CAGR in storage density. And we know also that Seagate has already shipped over 1 million units with a 0.35 failure rate, which effectively kills the argument that this tech is not ready for prime time. So with this HAMR, we talked about it before, Seagate has been the early mover here. Western Digital is growing. You're taking more of a dual path. Western Digital has been taking a different approach. They are maximizing their energy-assisted perpendicular magnetic recording, or their ePMR. And they've been using that to hit the 40 terabyte drives that they have today. And while they're kind of still working to qualify their HAMR, their approach is to have HAMR units in the qualification and be ready to be for a 2027 ramp up. This low-risk approach has allowed Western Digital to capture 86% year-to-date gains overall in their stock price as they focus on high-margin, large-capacity drives. And there's a huge competitive moat here with HDDs, because unlike what we see with the DRAM market, where Samsung as a volume player can flood the market and kill margins overall, this is a risk that Micron and SK Hynix have to live with in the DRAM market. But HDDs, they are effectively a duopoly. You have Seagate and Western Digital. They have both developed supply discipline overall. They aren't building extra factories. They are building capacity as a service contracts right now with the hyperscalers signing long-term agreements. This is a structural change in their business model overall, and one that I believe the market hasn't fully re-rated yet. We're still seeing slight increases, but we're not seeing the type of price re-ratings or the price targets move up like we have seen with the DRAM and the NAND players. So guys, overall, I would say if you're bullish on the iron layer of AI, on the hard disk drives and what we're seeing with the storage players, if you continue to see the cold storage story rising each and every day, you shouldn't just buy the drive makers alone. You should look at companies that surround them. You should be looking at the companies that own the supply chain that helps these HDD providers, these storage companies, these memory titans. This is how we build a professional grade portfolio overall. So I want to call out 3 stocks that you should look at. If you believe in the storage players, if you believe that they've had some divergence in the market, you should be looking at these companies as well. The first one is Lumentum. You have to remember that the laser on Seagate's disk drive, their drive head overall. Lumentum is the primary provider of those indium phosphate laser diodes. And if you look at their press release that they put out in March of 2026, they are opening a new US-based manufacturing facility specifically for the indium phosphate lasers to support AI data center demand. They aren't building that for fun. They are building that because the HAMR ramp is real. Without Lumentum, there is no HAMR technology. The second one is Teradyne. Every single 32 terabit and 40 terabit drive must be tested for precision before it leaves the factory. Teradyne owns the automated testing market. As drive complexities increase over time, the testing toll Teradyne collects will only go up. Plus, Teradyne reinforced in their recent earnings statement, they noted an increased demand for high-density storage testing equipment. This is a huge move for them. We're going to see more growth for Teradyne, not only with the other memory players, but also for HDD players. They are massive as we roll out 32 terabit, 40 terabit, and the road to 100 terabit overall. And the last one I'll call out that is surrounding these players is Vertiv. HDDs have moving parts that generate heat. As racks get denser with 30 terabit plus drives, the cooling requirements will skyrocket. Vertiv is the gold standard for data center liquid cooling and power management overall. So by diversifying not only with HDDs, but also with these enablers that I just outlined, you protect yourself that if one drive maker has a firmware bug or a recall, you can still capture the macro trend of the data tsunami that we're seeing in the marketplace right now. So how do you adopt your strategy? If you've been heavy on Micron and SanDisk, the question now is, should I relook at my portfolio? Is it time to rebalance? Should I revisit some of the HDD players based on everything we're seeing in the market right now? You have to remember first that Western Digital, it is a pure play HDD powerhouse. Now, after their split with SanDisk, both Western Digital and Seagate are both pure play HDD powerhouses. And I believe both these stocks still have room to run as they shift towards the high margin reoccurring contract profile. Plus, the global cold storage market, it is projected to grow at a 9.4% CAGR through 2035. This isn't a cycle with these companies. This is a secular shift that we're seeing in the market. So let's talk a little bit about what the trends are in the short, medium, and long term. In the short term, I remain pretty bullish on these companies for this main reason. Hyperscalers, whether it's Micron, Microsoft, Google, they're currently in a refresh cycle. They are ripping out their old 12 terabit, 16 terabit drives and replacing them with the 24 terabit, the 30 terabit drives to maximize the existing power envelopes that they have. In the medium term, I'm still kind of stable, bullish overall for these companies because as the agentic era takes off, the amount of long-term memory these agents need to store will create a massive floor for the HDD demand. And in the long term, like 2 years or greater, I think we have to be more of a kind of selectively bullish on these companies because the threat of QLC NAND, so high density flash, eventually kept catching up in price is real. However, for the deep archive and cold storage HDDs, they're expected to maintain a cost advantage through at least 2030. But on the other hand, we have to remember Samsung, as I called out earlier. There is a risk that they flood the market and have with their volume strategy and just drop SSD prices to the floor or drop them by another 30%. If that's the case, the HDD thesis will weaken in the market. But for now, the power versus cost, that math heavily focuses on the disk on the HDD players. So the bottom line for me, guys, is this: as I think about it, as I thought about preparing for this video, as I've seen the divergence that we've seen in the market over the last couple of weeks, is that AI isn't just about the brain or the short-term memory such as DRAM. It's about the knowledge base as well, the HDD data lake. And for the last decade, we were told the disk is dead by the analysts, by the bears overall for these companies. Today in 2026, Western Digital factories are committed through the end of the year. Seagate is laser beaming platters on their roadmap to the 100 terabit world overall, the 100 terabit drive. The iron layer is a pillar of the entire AI economy today. It is based, everything we have seen in the market, the demand we've seen in the market, these companies are an absolutely must-have, a must-own. And let's just take a look at what they actually did today in the market, just to show you the type of performance we saw. So if you take a look at Western Digital, these are the trends that we have seen today. like I said, look at that. We know we had a strong support yesterday, continued accumulation, just institutional support across the board. And Seagate is no different. You're seeing the same type of ramp up with Seagate. This is the broken theory record that I've talked about in time. We see it day after day with these companies. They're driving massive returns for the investors. So as an investor, I would say we always want to think about, we don't want to be where the ball is today. We want to be where the ball will be hit to in the future. You want to be where the ball is going. And right now the ball is rolling towards the massive, low cost, high density data lakes that only the HDD duopoly, those two companies, Western Digital and Seagate, they're the only two that can provide and help the hyperscalers and help the market in this case. The rotation that we're seeing is real right now. And we need to ask ourselves, will this rotation continue in the months, in the years ahead? Or will we start to see a shift back towards the higher end DRAM and NAND prices as we move into the next phase of the AI cycle? Let me know your thoughts below. Let me know your comments. I hope you enjoyed the video, and I'll see you guys.